All right, it has switched over to 11 o'clock now, so we will kick off the webinar. So welcome and thank you everyone for joining today. The webinar is Cash Flow Forecasting Just Got Smarter. So I know we have people joining from all across the world. So wherever you are joining us from, thank you for taking the time to be with us here today.
In this webinar, we're going to explore in depth how Fathom Forecasting can give you the tools to make more informed business decisions, understand your current and future cash position, and plan for different business scenarios. As a heads up, this webinar was tailored for accountants and advisors. If you're a small to medium-sized business looking at forecasting and how you can use this to gain insights, we do have a dedicated session that we ran yesterday, so we're happy to link you that recording as well.
Yep, absolutely. We have a really awesome session planned for about the next 40 to 45 minutes or so. But before we jump into that, I'd just like to quickly introduce ourselves. So my name is James Lynn. I'm a business development manager here at Fathom and been with the team for just over 2 years now, working really closely with accountants and advisors and businesses all over the world to help with advisory and reporting workflows.
Awesome. Yeah, my name's Jess Miller. I'm on the customer engagement team here at Fathom, located at our Brisbane office. I've been with the team for almost a year now. My role is to help our new business users get the correct training and resources to get set up for success. Awesome. And here's our agenda for today. We'll start by diving into forecasting, why it's so necessary, some of the main pain points, and take a look at the solutions. We'll also be jumping in and out of the Fathom product itself to show you some best practice tips on how our tool is used. Now, the webinar will include a Q&A session at the end, so please feel free to ask any questions you have throughout. You can use the Zoom Q&A feature at the top of your screen there. We're hoping that by the end of the session, you'll know how Fathom will help you add value to your clients' businesses and improve the client-advisor relationship through more efficient and effective forecasting.
So to kick things off, we've got a quote here regarding why forecasting is important for accountants and advisors. So this quote from Adele really sums it up perfectly. It's okay to look where you have been, but clients want to know where they're going. So we're finding this is especially important in today's current business landscape with lockdowns and uncertainty affecting businesses across the world. Clients need now more than ever to have a clear picture of where they are, where they're going, and the optimal decisions so that they can succeed going forward.
Absolutely. So just a few details about the Fathom forecast to start with. We provide a three-way cash flow forecast, so it's backed by the profit and loss balance sheet and cash flow statement. We also use the indirect method of forecasting, so using your prior period actuals to predict longer-term cash flow. We use the data that's already recorded in your accounting system and pull that data to help generate your cash flow forecast.
So as part of developing this tool, we did a little bit of research and, sorry, I'll just find that slide. Skipping over a little bit. Yeah, so as part of that, developing that tool, we have done a lot of research and gathered a large amount of feedback from different types of users on how they felt about the current forecasting environment. So the struggles they were facing and what they'd like to see more of in the market. So you can see some big numbers up there on the screen. We had 78 one-on-one interviews, over 200 participants on surveys, and over 800 insights on support interactions. And that was done with business owners, CFOs, accountants from different industries and different sized businesses as well. So this research has been really useful in understanding some of those key frustrations that are felt around forecasting at the moment, which has driven a lot of the direction in our current forecasting tool.
Absolutely. So as James mentioned, we've uncovered some of the key frustrations from our accountants and businesses. The first one here is that forecast creation can often be too time consuming. So oftentimes the process includes quite a bit of manual data input, which can be prone to human error. One of the main complaints we actually heard was that the time spent creating the forecast didn't reflect in the value that was delivered with the forecast. So accountants and advisors like yourself are likely already time poor. Fiddling around with spreadsheets and trying to key in data or manage formulas probably isn't the best use of your time. Another pain point identified was that other forecast methods are not flexible. So you've spent all this time creating an accurate forecast for a client, and then you have to repeat the process again a few months down the line. We found that 57% of our survey participants had to update or revise their forecast every 1 to 3 months, and 33% of accountants are updating their forecast every single month. The next pain point we uncovered was that it's often hard to decipher the forecast. So with forecasts, there's many numbers coming from different places, each with their own unique calculations. It can be hard to revise your figures, understand where the numbers are coming from, and also that often reduces the confidence in the forecast. Finally, our last pain point is that it's often difficult to communicate the forecasted figures. So typically we see the person who's worked on the forecast knows it inside and out, but then they'll need to communicate it to other people, either in the business or maybe some stakeholders who might not be completely familiar with the financial or accounting concepts. So those are the main pain points that we really uncovered.
Absolutely. And off the back of those frustrations, our development team has created our forecasting feature with those 4 pillars as a foundation. So you can see we've listed the pain points that we're looking to solve with each of these pillars here. So forecasts, they're typically time consuming. So we tried to make sure that forecasting in Fathom is efficient to build and maintain in the future. Adaptive and relevant, so allowing you to leverage the work that you've already done and not having to jump in and redo the work every month, quarter, or year. Auditable and transparent, so we wanted to make sure that every number can be drilled into, so you can easily see where it's coming from and the logic and reasoning behind it. So you'll find that I'll be referring back to this point pretty frequently when we do the demo later on as well. And approachable and actionable, so something that is easy to work with your team on, it's easily and effective to communicate with clients the different potential options and next steps.
Great. So there is a 5-step forecasting life cycle that you go through when you're creating a forecast for a client. The 5 steps are baseline, plan, explore, report, and monitor. And if we go into a bit more detail here, baseline refers to what's going to happen if my business continues on its current course. Then you have plan. So after setting up the baseline, let's plan for the future. What projects or events can potentially be run to improve our business? The next one's explore. So what happens if we implement different strategies at different times and finding the optimal combination for the timings of those projects. Then we have report, which is how can I report on this forecast effectively to my team and to my clients? And finally, we have monitor. So how can I keep the forecast relevant for decision-making throughout the year as new actual data rolls in? So I'll pass back to James, who will walk us through the first step, how to set up the baseline forecast in Fathom.
Yeah, thanks, Jess. That's a really helpful framework for thinking about how to create the process of going through the forecast. So as part of the baseline forecast, when you get started in Fathom forecasting for the first time, there are 3 different options for you to choose from. So on the right-hand side here, we have link to existing budget. So this is really helpful if you've already created a forecast in an external software. Maybe you want to use that as your baseline. So what you can do is import that into Fathom as the budget, either through Excel or through your accounting system. And then you can use that as the baseline going forward. The middle option here is a quick start forecast. So this is probably the best way to jump directly into the forecast itself. What we're going to do here is apply linear regression. We call it smart prediction. So taking a line of best fit and then projecting those numbers for your forecasted figures going forward. And on the left-hand side here, we've got a custom forecast. So this is going to give you the most control in terms of setting up how we're calculating your figures, setting up those default accounts, any tax settings, and also loans and depreciation. It's worth noting that after you go through any of these steps, you'll reach the same forecast. It's just how long do you want to spend right now in customizing those steps. So no need to stress about which one you want to choose. At the end of the day, it's going to be the same thing. So we'll jump into a custom forecast to start with today, just to show you some of those settings that we can run through. This first option here, default value rules and timing profiles. So the value rules are basically the way that we are calculating your forecasted figures in the 3 years in the future. So you can see here we have our revenue accounts, our cost of sales, and our expenses. Currently, they're all using smart prediction, which is linear regression. We can click on that and change it if we want to. So we've got options here. Instead of smart prediction, we can choose to link to a previous period, for example. So if you want to use actuals from last month, last quarter, or last year with a percentage or dollar increase or decrease. We can also choose a constant or growing value. So if you have any fixed expenses that are going to stay the same going forward that you know of, you can use this for that particular case. You can also generate values based on formulas, based on different drivers and different chart of account lines. So if you have maybe some costs of sales that are like 40% of certain revenue accounts, you can model that out here in the formula. And then any changes you make to that revenue account are going to affect that cost of sale account as well. And the final option here is linked to budget, which we talked about already. So those are the different ways that you can calculate your forecasted values going into the future. The next option here is our timing profiles. So this is defining the way that your P&L values are timing down into the balance sheet. So at the moment, you can see that 100% of the cash for my revenue accounts are timing into the balance sheet in the same month. So I can actually include some new months, and maybe 50% of cash will go down into the balance sheet in the first month, maybe 20% in the next month, 20% in the next month, and 10% in the month after that. You can choose different billing cycles, so maybe quarterly or annually. And you can also specify when in that annual cycle you're collecting the cash. And if you are collecting it earlier, Fathom is going to deal with all of that unearned revenue and all the implications of that automatically for you as well. So we'll go into the next step here, which is default accounts. So this just allows you to set up the default accounts for these certain accounts here. So you can select your default cash account, your default accounts receivable, accounts payable, and any P&L impacts that are going to affect these accounts, we'll select those default ones that you select from here. Next up, we have the tax settings, and this is an important one for accountants. Typically, we find that a lot of the solutions out there currently aren't really hitting the mark with the tax settings. So we've got 3 different types of tax settings that you can set up from this step. Consumption taxes, so for example, GST, withholdings, so PAYG, for example, and also tax expense accounts. Now, Fathom is going to try to automatically pre-fill your tax settings. So you can see it's done that here. It's recognized that I have GST payable in my chart of accounts and PAYG payable as well. You can modify this if you need to. So if you need to change it to a cash basis, change the default rate, change the account, or even change the payment cycle. And you can add as many taxes as you need to. And the final step here is loans and depreciation. So similarly, Fathom is going to automatically recognize if you have any short-term or long-term loans. You can see I've got one being recognized here. We can specify the interest account this is being posted to, the repayment account, the interest rate, and also whether this is principal and interest or just interest only. And with our depreciation here, we can specify the depreciation account and also the method of depreciation that we're using. So whether we're using a constant value, a straight line depreciation, or maybe even a percentage of opening balance. And then Fathom is going to model that out for you going forward. So that's it for the custom forecast onboarding process. From that, you can go ahead and create a forecast. I'll just step into an existing company that I've already created here. So what we're seeing here is the main forecast grid. And if you go through any of those onboarding steps, this is where you'll eventually end up. So we're looking at our profit and loss to start with. You can see all of our revenue accounts, cost of sales, expenses as well. At the top, we can select to have a look at our balance sheet. We've also got a drivers grid where you can set up those drivers that you'd like to use in your formulas. Scrolling a bit to the left here, I've got some grayed out cells. So these represent our actual data coming in from our accounting system. So we've got 12 months of actual data, which is flowing in from Xero, QuickBooks, MYOB, or Excel. And then scrolling to the right here, all of these white cells, so from February onwards, these are our forecasted values. So we can do, again, 3 years into the future. So what I can do in this profit and loss grid is click on any of the accounts that I've got coming through. You can see that opens up to show a baseline as well. And we've also got a little panel opening up on the right-hand side, which gives us a bit of a summary of what we're seeing for this particular account. So we've got a summary of all of our baseline value rules and all of our timing profiles as well that we've set up. And it's worth noting here that you don't have to use a single value rule or a single timing profile across the entire 36 months. You can jump in the middle and change the rule if you need to. So you can see that's exactly what I've done here. I've actually included a direct entry in April 21st, April 2021. And then from May 2021 onwards, it goes back to actuals from last year. And the same with the timing profiles as well. I've changed that timing profile starting from January 2022. Now, I can also drill down into the individual values of certain accounts. So if we click on the baseline value for this sales account, and again, the baseline, going back to that forecast life cycle, it's what you would expect the business to do going forward, all things held equal. So here we can see a visual representation of what that forecast is going to look like for this account going forward. So you can easily spot any anomalies. We've got that value rule coming through as well. So we're using actuals from last year, and we've got the timing profile coming through as well. Now, you can edit any of these rules, and then a really great option is down at the bottom here. So we've got these assumption notes that you can include. So this is a great way to just document down any decisions that you've made regarding those rules. So you can see here, I'm saying that sales is expected to be higher than last year, just because of less COVID restrictions. And you can also choose to include that in an assumptions report as well, which I'll show you a bit later on. With the timing profiles, you can select to preview the cash timing impacts. So I've set up this this timing profile is 50% for the first month, 30% and 20%. And since I've got $439,000 of revenue coming in, we can see actually the impacts to our cash accounts, our accounts receivable. We've got impacts to our GST payable as well, and our current year earnings. What I can actually do is then drill down even further into any of these numbers. So suppose I wanted to have a look at our cash for February. I can click on that. We're taken to the balance sheet. I'm shown the cash value for February. And I can even drill down further from here and view the detail for that particular cash account. So I can now see all of the P&L accounts that are actually impacting my cash for February 2021. So again, going back to that point of auditability, we're really trying to make everything in the Fathom forecast auditable for you, so you can drill down even further and understand exactly where those numbers are being derived from. So we'll click on the sales figure, and then we'll just head back straight to the P&L from the balance sheet. Awesome. So that is the baseline and setting up the baseline for your forecast. I think we'll pass it back to Jess to talk through the next step.
Awesome. Thanks, James. So now after we've created our baseline forecast, we can start modeling out some potential plans or projects for our business. So maybe we have a marketing campaign that we'd like to run, we want to hire an employee or take out a new loan. You can model these events using micro forecasts to help you plan and see the financial impact on your forecasted numbers. So James can jump back in and show how micro forecasts can be layered onto our baseline to really give you that ultimate flexibility over your planning.
Yeah, absolutely. So I've clicked into my sales account and I talked about how it's opened up a baseline value underneath that. But you might have noticed that we've got 3 other lines coming through as well. So these are actually our micro forecasts that we've modeled out. They are basically self-contained events that contain all of the financial impacts to our P&L and balance sheet. And they are separated here for us to be able to look through and see those impacts individually. So we can actually access our micro forecasts from the 3rd tab on the left-hand side here as well. So you can see a couple of micro forecasts I've already created. We're looking to run a marketing campaign. We're looking to hire a truck driver, purchase a new truck, take out a loan, and potentially win a government contract as well. So I'll just create a new micro forecast and we'll call it hire a consultant. This is a hiring event and we'll start it in February 2021. So I can model out all of the impacts to this particular micro forecast here. So I can model out our sales accounts, our expense accounts, or I can use one of our quick start wizards. So we've got a hire employee wizard. So this consultant is a permanent employee. Let's say they're making $60,000 a month. Sorry, $60,000 a year, I wish. And we'll include our wages account here. We can also include any other accounts as well. So it's saying here, if you want to include equipment costs or training expenses, you can certainly do that. But you can see that Fathom's doing a lot of the heavy lifting here. So it's modeled out all of our salaries and wage accounts, our impacts to income tax expense, cash, tax liability, etc. I can then model out some sales. So hopefully this consultant is bringing in some revenue. And suppose you know how long they're working and the billable rate that they're charging as well. So we'll give them 3 months to get onboarded, but suppose in May, we're expecting them to start bringing in some cash. So we'll select formula, and then I can start to build this out using some drivers that I've already created. So we'll select billable hours for this month times by the billable rate. So this is just an example of how you can use formulas and drivers. You can choose any of the different value rules here to generate those values. So we'll create those rules. That's coming in. You can see how that looks in the visual perspective. And if I head back to my main forecast, you can see with my sales account, that hire consultant event is now pulling through into my main forecast. $14,000 is coming through for May. And if I add all of these micro forecasts together on my baseline value, I've got my total sales figure for this particular forecast. So it's a great way to just plan out all of the different events that you're looking to run into the future and isolate the impacts to your financial statements. So what would be the next step there, Jess?
Awesome. Yeah, so our next step of the forecast life cycle is explore. So after you've created the baseline forecast and set some potential plans that you'd like to run, you can actually explore the different strategies at different times. So you can mix and match micro forecasts to see which combinations of timings will give you the best return. That's really through the business roadmap. So you can group these into potential best and worst case scenarios that might occur, which I think is especially important nowadays with so many uncertain times for businesses.
Yeah, absolutely. And this is probably the most exciting side of the Fathom forecasting, at least from my perspective. So you've got all of these micro forecasts that you've created that you're looking to run, but now what you need to do is just see, which ones you'd like to run in conjunction with others, or you'd like to see different timings and how they would impact your cash flow. So what you can do for that is use the business roadmap. So this is a visual depiction of all of your micro forecasts that you've set up. So you can see those running down on the left here, and you've got the exact starting point as well as the cash impacts highlighted as the dots. Now, something I haven't touched on yet, which you might have noticed in the main forecasting grid as well, is down at the bottom here, we've got cash on hand coming through. So what we've done, this is basically quick metrics, we call it. So we're just highlighting a couple of metrics that are most important for you to keep track of as you work through your forecast. And anytime you make changes to your forecast, these numbers at the bottom here are going to respin. So you can always stay on top and track how they're doing. You can edit these metrics, so you can add your own quick metrics if you wanted to, and you can also specify the threshold where it turns from red to green. You can see at the moment that I have a couple, well, just one really red spot coming through for cash on hand. So this is where I can start to use the business roadmap and explore different strategies and different timings. So you can see I'm looking to hire a truck driver and have a new truck purchase at the same time. So we've got a loan that's actually starting in the next month. So what if potentially I bring that loan forward a month? You can now see those numbers respin and everything at the bottom here has turned green. So this is a great tool to use with your clients to engage them and deepen that client advisor relationship because it is very visual, it's very engaging, and you can really sit down and discuss different strategies for them going forward. We've also got a scenarios tab, which is number 4. So this is also going to help you to explore different scenarios into the future. So I've created a best case scenario and a worst case scenario. You can create your own scenarios as well. So we'll call this one no more COVID, a bit optimistic. Let's say the vaccine all works. So we can add a configuration here. So this is based off our main forecast at the moment. And we're going to say this will have a 10% increase in revenue. On the right-hand side, we can apply the micro forecast that we're looking to include with this scenario. So we'll run the marketing campaign, we'll hire the people. Maybe we don't need to take out that loan anymore. So once I create that scenario, you can now see this pop up in the top right here. So we're under the no more COVID scenario. Any changes that you make to your forecast or to your business roadmap is going to be contained in that scenario. So you can see if I shift everything across a couple of months and then close out this scenario here, they've all switched back. So you can kind of explore different groups and different timings of those micro forecasts to see how that impacts your cash flow at the bottom. And same with the main forecasting grid as well. These scenarios are available for you. So you can switch between best case and worst case, see the updated live impacts to your revenue accounts, to your cost accounts, and to your cash on hand at the bottom there as well. So that covers the explore side of things. What's next on the list there, Jess?
Yeah, absolutely. Yeah, I really love those visual looks as well. I feel like that's impactful if your client maybe doesn't have a strong financial background too.
Good point.
Yeah, our next step is report. So reporting on your forecast is another really key way to communicate to others on what we expect is going to happen. If you recall, one of our key pain points we uncovered is that it's often hard to communicate with others on the forecast. So we've made Fathom's forecasting fully integrated with our management reporting to make that easier. So I'll pass it back over to James so we can really jump into some of the most valuable reporting tools there.
Yep, absolutely. So there's a couple of ways that you can present or report the forecast to anyone that needs to see it. So, I mean, you can present the forecast live. So going through the business roadmap, walking through the micro forecast, etc. There's also an option at the bottom left here to download this to Excel. So you can download the P&L, balance sheet, and cash flow statement into a single Excel file. And you can select the period range to show here. So the max range there is the 12 months of actuals and the 3 years of forecast. Alternatively, you can put a lot of these components into Fathom's management reports. So if you don't know, Fathom also has several other features such as online dashboards and management reporting. So you can create your own customizable management report that you can save as a template and then automate into the future. So let me jump into an existing forecasting report that I have set up. So I've included a couple of components here related to forecasting. So we've got the business roadmap coming through for a particular scenario. We have a projection table with month-by-month results for financial year 2021. So looking at actual data up to January 21, and then forecasted results after that. We've got some trend charts coming through. So here I've got a revenue scenario. So you'll be able to show your actuals up to a point and then show your forecasted revenue based on the different scenarios that you've set up. We have our assumptions table. So you can include this in your reports as well, as I did mention previously. So any assumptions that you make to your value rules, to your timing profiles, or even to your taxes, these are going to come through and make it easy for you to collect all of those in a single place. And finally here, I've created a bunch of different charts and graphs that are using actual data. So just showing you that you can include your actuals together with your forecast in the same report. And it is super easy to customize a report. Everything is a drag and drop experience. If you need anything else that's not currently there, you just find what you're looking for and just drag it into your report to include that. Great. What's the next step there, Jess?
Awesome. Yeah, our final stage of our forecast life cycle is just to monitor it going forward. We want to make sure that with all this work you've done, the forecast is going to stay up to date and also relevant as the months go by. Because our data is coming over live from our source accounting system, the forecast will dynamically update and the actual data will flow through. You can simply monitor the forecast and then make sure it's really staying relevant for you. So we'll jump back into Fathom for the last time and we'll show you how you can automate the flow of your data into your reports and monitor your figures with ease.
Yep, absolutely. And that's a great point. I mean, all the data is coming in directly from your accounting system. We have that live integration. So, and the forecast is rolling. So as the new month's actuals come through, the forecast is going to update with those new monthly results and recalculate for you. And when it comes to the reports, you can certainly automate that process as well. So what you can do is schedule reports to be created for you on a monthly, quarterly, or annual basis. So I'll create a published report using my existing template, and I want this to be created every month maybe on day 10 to make sure the numbers are reconciled in my accounting system, and then also send a notification email to me when that report is created. So you can just imagine the flow of data from your accounting system into Fathom through the reports, and then popped out in a schedule here. Great. I think that comes to the end of the demo side of things in this webinar.
Awesome. Thanks for the demo, James. Hopefully we've all learned how you can optimize Fathom forecasting to help provide accurate and presentable forecasts for clients and to build on that client-advisor relationship. Now, if you want to learn more about Fathom, I'd really recommend signing up for a free trial. It's fully functional and there's actually no credit card required. You can also reach out to us directly, so you can see James's email address listed on the screen there. We'd love to hear if you have any questions or any feedback for us on the session today.
Otherwise, we will spend the next 5 to 10 minutes or so right now just to answer any questions that you might have off the back of this webinar. So if you do have those questions, feel free to shoot those through in the Q&A box, and Jess and I can get to those right now.
Absolutely. Yeah, seeing some coming through. So thanks for those questions, guys. The first one here is, can you include a separate budget together with the forecast? It's a really great question.
Yeah, absolutely. And this is something that, you know, there's different definitions for budget and forecast. So the way that we see things is the budget is something that you would set at the start of the year as a goal. And the forecast is something that updates continuously as something that is a little bit more realistic in the direction of the business. So you certainly can include a budget together with your forecast in a company. So you can upload that from the settings, and you can bring that in either through Excel or from your accounting system.
Absolutely. Great explanation. I do have another question here. I have multiple entities that I need to forecast. Do you support this?
Yes, we do. And there's a couple of ways that you can do this, and there's a really good question. So just going back to the main Fathom screen where we can see a list of all the companies that I've imported, you can see here that I've created a consolidated group, which comprises of 4 different entities. So when I hover my mouse, I've actually got access to forecasting for the consolidation as well. So if you are looking for a forecast at the consolidated level, then you can consolidate all the entities and then jump into the forecast at that level and generate a forecast. If you are looking to generate individual forecasts at the entity level and then roll those up, what you can do is save them as a budget. So you can save them as a budget. Those will then roll up into the consolidation. And then from there, you can link the forecast with the budget, if that makes sense. So it's a bit of a workaround, but it's certainly possible to do, and it will achieve the results that you're looking for.
Awesome. Another question coming in here. How much does forecasting cost? Is it any extra?
Yep, fantastic question. So the answer to that is no, it's not extra. It doesn't cost anything. It's just part of the Fathom subscription. So you can see at the top black bar here, we've got access to analysis, which are our online dashboards, reports, which are the automated management reports that you can schedule going forward, and then also the forecast as well. So it's part of the package, no extra cost, and you can play with it all in a free trial.
Absolutely. So quite a few comments and questions coming over here. I do see some that are saying, can we get a recording? So we'll make sure that recording gets to you after the session. Now, James, do we have any more time for the rest of our questions? There's quite a big list here.
Yeah, definitely appreciate all of your questions, and we'll make sure to send through emails answering those individually. So thanks again. We will end the session today here. But yeah, feel free to get in touch with us if you have any further questions or comments. Otherwise, we will send through that recording and we'll be in touch.
Absolutely.
All right. Thanks, everyone. Enjoy the rest of your day.